what's up? Red Panda Anthem. Red Panda, what's good?
Real quick, let's go through a couple ETFs and a couple stocks tied to China that you can invest in. And the homework last week was, what are the 4 ETFs you can invest in or short if China falls apart? Let's go through a couple of them real quick. And the same thing goes with any asset class. Please write this down. Only invest in the top 4. So if you look at Bitcoin, I'm currently at 21,335. Remember when the world thought it was impossible for us to slide to 20, but if you look at these areas up here, anything in the 60 and 70 range is a no-go. These are the areas in which you will want to exit or take profit. You do not want to buy here. This is a no-buy zone. You only want to buy in the trenches. A simple thing you can do is just mark off the bottom of each month, and then that can tell you a price of where you can get in. Do not buy. And once again, if somebody is telling you to buy or going on like 3-month media campaigns telling you to buy something, it's only because it's in their benefit to do so. You don't have to really push your asset class if it's good. If we look at Ethereum, Ethereum has slid down as well. I told you guys last week to buy 1544 on August 20th. It went to 1531.73. You would already be in profit. For those of you who executed and did that, I am proud of you. Let's go to some of the ones that we talked about in China. CHIX. Does this look like a good one to invest in long term? Yes or no? The top is up here. The bottom ranges are down here. Stock is currently at $11.99. I really don't like it until it gets maybe to $8.30. Let's look at KBA. Put these on your watch list. I don't want you to buy them. But KBA is another one in which you can look at and which you potentially can short. I want to say this now. It's a homework question, but I'm going to give you guys an answer. How long should you short a company or asset that is falling apart? How long should you short a company that is falling apart? In the worst case scenario, I only want you to short it for 3 months. And here's why. You can short a stock, and at maximum, if it is not leveraged, the highest return you can get is 100%. The risk is unlimited though. And if you don't have rules in every trade that you take and you don't stay away from emotions, it can lead to a lot of disaster. So I only want you to short something for 3 months, and you still need to short at the top of the market. So if at top of 2020 or 2021 you were shorted in this area, I would not be mad. Now it's almost at the value area in which you should be buying before you touch it. Let's look at FLCH. This is a 5-year chart. Is this something you will want to invest in? The high last year, $38.35. It is now $19.25. Yes or no? Let's look at PGJ. This would have been a hell of a short if we could have caught it up here. Shout out to everybody in Dream Team and the snipers. If we could have caught it in this range from 84 down to 72, yes, it's at 28 bucks now. Now the move is over. If we go look here at the bottom range, 2059 and 1138 are like the all-time low areas in which to buy. Those are the only areas I would look to potentially buy those long-term. Hold on. The number one thing I want you to know, and I tell you guys all this all the time, you don't have to gamble. GXC is the next one. So when everyone was talking about the crude trade from last year, nobody was talking about short China. I said this at InvestFest, and I said this here on the show. Investing, especially when it comes to trading, it comes down to who has the best information. And I know some of you get disheartened and be like, well, I don't work for a fund. Neither do I. I don't know billion-dollar hedge fund managers. Me either. They're knocking now after getting 70 and 80 things right per month, right? Only thing you have to do is read. And when you do your own homework and don't rely on anyone else, your thesis and ideas is a lot easier to be uncovered. KURE is another. I'll zoom past these. Let's go to EWT. Let's go to KRGN. It's not there. Let's go to MCH. It's too new. So let's look at crude, and I'll talk to you about commodities. So when everyone was saying oil was the way to go because the market was falling apart, and we could look at USO, and USO went from $54 up to 90, and then it went from 90 down to 74. By the time you're hearing it on mainstream news, the trade is over. What happened to the guaranteed Kathy Wood ARC play? Everybody who says play to y'all be playing with y'all money. I'm telling you, like, and I know sometimes my delivery is not the best, but man, if I see you about to get killed and you about to get gunned down, am I supposed to whisper to you, you're going to get killed, I want you to die? Y'all make this so much harder than it have to be. Please, if right now in November, if Russia and Ukraine start to have issues because Russia begins to play with the natural gas supply, what is the trade you should take to profit off of that situation? Please write this down. I need you thinking 6 months to a year out. 3 weeks is not going to cut it. And trust me, if Apple falls apart and is no longer one of the top companies ever, I'll be the first one to swing that banner and swing that flag and tell you, hey, it's over with. It's dead for Apple. I would love to. In the interim, though, continue to buy them. Like I said last week, if Michael Saylor would have just held on to 2 Tech 2 Index, even though his prospectus was based around Bitcoin, he would still be alive today. And it's a bunch of hedge funds who don't like him. If you ever saw Billions, you know the game that they're playing with Michael Saylor because they don't want him to get control of the industry and get higher returns for clients the same way they didn't want Kathy to, because if you got 25 to 30% return a year for a client, now you fuck up the entire industry for a whole bunch of people that cannot trade. You have to understand who the enemies are of the people you're investing in. And as Peter Lynch once said, you cannot be a superstar analyst, an investor, and be a media darling at the same time. It's too damn hard. You end up putting arrows on your back to stop you from actually getting the gains for your clients that you need. I really just want you guys to be able to win on demand. These next 2 to 4 years are going to be tough. And given the political climate of not having some amazing candidates, things can get even tougher. But a harsh truth is the inability to listen is going to cost you millions over these next 5 years because a lot of you would rather be popular than to be profitable. And boy, I'll tell you, when that cash coming in, that popularity, that shit shoot up a little bit faster. Shout out to the parents. I'm sorry for cursing. I'm going to do better. God ain't done with me yet. My baby Xander told me he want me to quit too, so that's my new thing. But I want you guys to stop focusing on being popular online and focus on being profitable, because a lot of the people that you're looking up to are dying on the inside because of the games that they have to play being in the industry that they are in. Go ask your top 10 celebrities that you love and ask them, are you happy with where you are? And watch how they hesitate and then throw on the Hollywood active. Yes, I always dreamed to be here. And when I was 9, I used to twirl around in the mirror and dream of twerking for $2 OnlyFans. Okay. Let's go to announcements real quick. Of course, I want you guys to come slide through London for InvestFest Euro movie. Market Mondays in Madison Square Garden. The rebellion will be in full effect. A bunch of surprise guests. I cannot wait to see y'all there November 27th. I know I never did the birthday sale, so I'll activate that Wednesday and I'll run it for the rest of the month and part of September, so you guys will have time to get in. You can catch us at Future Proof with my guy Josh Brown, September 12th, and we will be doing a live version of Market Mondays there. You know, shout out to Nick Cannon, shout out to Cliff. A little while in that episode coming soon. I mean, hey man, I'm telling you, stick with us. And some opportunities for those of you in the rebellion are going to open up real soon too. And I want you guys to do me a favor and go rate the podcast and give it 5 stars. I love you guys dearly. You guys have asked about water ETFs. We're getting shortages all across the world. And the only one that I really love is CGW. Let's go look at the chart real quick. So here is CGW. Once again, 2 Tech 2 Index. If you choose to invest in anything outside of that first, you are making a mistake. CGW slid down from $60.90 to a little bit above 45, and now it's at $49. We are seriously going to have to face and fix a couple of big problems in the United States. Water shortages are going to be one of them over the next 5 or 6 years. So you want to stay out of this zone up here for sure. And you want to look to buy around these zones down here, the $28 to $40 range. You want to wait for things to go on sale. I know it's easier to say, forget it, I'm going to just buy the new price and hope that it goes up. But one thing I want you to know, and people know this in real estate, all of your money is made based on the price that you pay for something. If you have to hope for something to go up, more than likely it's not. And some of you were super upset about this Ryan Cohen situation with Bed Bath & Beyond. And I know he made the statement that he's tired of small investors getting taken advantage of. But if we go back to pricing, as we talked about before, let me pull this up for you. You never want to buy off hype. Please write this formula down. First, I want you to look at the 5-year month chart of any company that you're choosing to invest in, number one. Number two, if the high was not within the last 2 years, it is not a good company to invest in long term. All my swing traders and all my traders, shout out to you to do Forex trading. And if you leveraging crypto, you see this all day, right? So the white candles are upward or bullish candles. The yellow candles are down or bearish. It hit these previous highs before. In January 2021, it got to $53. In June, it got to $44. This year in April, it got to $30. And it slid all the way back down to $4.08, and it shot up to $29. If you just walk through Bed Bath & Beyond, right? Even back in the day, like when I was in college and they would send out them 10% off coupons to everybody in America. Like discounting products that are already discounted is not a good business model, right? But anytime you see someone start to hype the meme stocks up tremendously, the downside is greater than the upside. Truth be told, Ryan is just doing what any investor is going to continue to do and should do. And they have found that if you have a community behind these stocks, that they can use you and your family and your friends and your capital to allow their liquidity. So he got out and everyone else is holding it. But if you look at this slump down from $80.82, you can see this is not a good company to invest in. This company started falling apart in 2014. Let me zoom out a little bit further. I mean, if you look at this. This is the all-time chart going back to 1992 when they first IPO'd. Bed Bath & Beyond is almost at the 10% price level of the all-time low. So we had a nice run from the 2000s and post 2008. And honestly, even in 2008 through 14, a lot of that run up was from the Federal Reserve printing money and quantitative easing being pushed into the market. And I know sometimes you guys feel like I don't want you to make money from this trade. If you get in and you're disciplined as hell and you're able to jump in 5 or 6 days and make money, great. Let's look at a day chart real quick. So if you was able to catch part of this move, 450, even on a gap up, when you saw it went to 11, I'm not mad at it. I'm not mad at it. But when you saw it got to $25, gaps usually fill. So if it gapped up to the upside, you knew that it was going to slide back down. And technically, in a few weeks, Bed Bath & Beyond is probably going to come down back to $8.29. If it breaks that floor, it's going to go back to $4. Use the trades. Don't let the movement or the person at top use you. This is what I always tell you. You have to see who is investing in these companies and who is pushing this narrative and who all of a sudden on a Monday makes these stories go viral. Because guess what? I want to tell you the truth. If you're black or brown, nobody who runs a hedge fund is going to come to your community and tell you, yo, this is the play, this is the one to the moon. No, it's not going to happen. Never in history has it happened. And if you think that a community is rallying around a position for your benefit, you're going to get taken advantage of. I'm sorry. There's no other way to put it.
This that Red Panda Anthem. Ian, what's up? This that Red Panda Anthem. Red Panda, what's good? Red Panda Anthem. Your boy going up. I know they can't stand it.